Good morning, everyone. This is 17th of February 2026, the pre-market outlook discussion based on the yesterday's behavior. Though it has attempted to inch higher or move northward, the attempt what it has taken was a fragile one. Yes, of course. The reason was without consistently staying above the 25,740 and by the way of attracting the follow-through buying in both way, yesterday's one was absent. Because of this absenteeism, the behavior what it has formed on the charts for the Nifty has a hidden signal that the lacking on the buying and sustainability above the important levels, that and all probably pulling the index back to the pavilion. That points and all already discussed for the downsides. So the probability will be increasing in case if it is closing below the Friday's low. That was discussed even yesterday. The Friday's high and low will be dictating like the upcoming session's trend, as well as today high and low also going to join with the Friday's one as a behavioral effect. Today's high and low may be dictating the next 1 or 2 sessions trend for the Nifty. Anyhow, both these Fridays and today's the 17th of February's one would be togetherly directing the markets, particularly on the Nifty. Based on that, the trades can be approached, the strategies can be applied, levels can be maintained. In the phrase itself, see, we have clearly mentioned that the green flash, no trend clash. So the trend, not even a single point of clue it has given for the change in the trend. So the rally yesterday witnessed was just a relief rally only through the way of a minor short covering, particularly from mid cap and the small cap space. And the volatility was happened because of the tug of war between large cap and mid and small cap. Today's opening session will be on the flat to negative side, aligning with the neutral tendencies, mostly favoring to the pessimistic approaches. So the trend probably continuing in the way of attracting the selling with a sell on a rise approach. So one can follow or adapt the strategy throughout the day with the levels and all mentioned here. Unless the Nifty sustains about 25,740 as mentioned in the report, every bounce can be utilized to trim your existing positions on the long side, or the fresh short positions can be built. This was clearly yesterday. We have discussed the same, the extension of yesterday's behavioral impact only we are now discussing. On the conversely, on the downside, if you look back, the breaking and the sustainability below 25,449 will create more chances for making a next leg of rally on the downside. Between these points, 25,449 and 25,740, non-directional move with a sell on rise strategy can be seen. From the positional perspective, though it has witnessed a close above 25,740 consecutively in the recent week, because of the IT sector's disruption that limited the upward momentum, and even disturbed the behavioral impact. Because of that, it has to decisively close about 25,740. Once again, there only we can expect the upper trend. Until then, you can maintain the weak bias on the Nifty side. On the stocks and the sectors front, sectors include bank, energy, pharmaceuticals, metal, real estate, and auto. Can be expected to move the markets today. On the stock side, based on the news, no earnings based stocks listed here since the earnings calendar almost ends for the December ended one. So the news based one, based on the joint venture, based on the new business shining, new order win, like all the important things and all, having the stocks to move on either side. See the Reliance Industries with the positivity of the new JV, Lupin with the US FDA based inspection oriented information, Cochin Shipyard based on the positive news that the defense oriented order it got, Texmaco Rail based on the state oriented order it got, JSW Infrastructure fundraising plan, TVS supply chain order win, delivery, the EV push, and based on the technical behavior, Power Corporation, Torrent Pharmaceuticals, GMR Air Force. These can be focused for the day to get an enhanced trading opportunities. Keeping stop loss is very must in all the way of transactions, irrespective of the direction. So that's it from today's pre-market discussion. Keep the levels we have mentioned here and maintain the strategy we have discussed. And the trend what we have been following is still sideways based, a range bound volatility now and then also can be expected, but the trend is still on weaker mode. So the weak trend may be persisting until it is decisively closing about 25,740. So sell on rise can be the good approach for the day traders and short-term traders. Thank you for participating in today's session. We will meet again tomorrow. Yeah, the few Asian markets are having a holiday, and based on the query, we are actually addressing it. So the for gold and silver and all, based on the international, particularly US gold, which are all following other regions. So that can be followed if you are actually trying to observe the price. And if you are trying to trade on it, M6 based one can be tried. Today, seems to be a flat to negative trend for gold and silver. Within a tight range, seems to be consolidating with a sideways manner. It is better to avoid trading on it for the time being until it is getting a clear direction. See, the yesterday's high and low is acting as a clear boundaries for on the either side for the gold and silver. It is better to wait and get the direction once the high or low getting broken. Hope the query has been addressed. For the long term, yes, of course, it is the right time to purchase or invest in the gold. So first gold should be preferred, then the silver can be, because silver will be having the volatility than the gold. So in front of the safetiness and in front of the capital appreciation, it is better to approach gold first or higher than the silver. So for the long term, it is of course better to involve in gold. So the proportionation may be amongst your capital, at least 20 to 30% should be on the gold silver side. So the correct rate of purchase, if you are a long-term investor, there is no need to wait for any bigger correction, like because the correction what recently happened, even still an opportunity for the investors. So the February to March, one more downsides can be expected on the silver and the gold. where you can make your lump sum investment there. Until then, you can keep purchasing with a regular basis. It would be better to weekly or a daily basis even. So that can be a better idea. So hope you got the, yeah, SIP ways, sir. It is better. Thank you. Even ETFs, that also can be followed. Thank you for your query, sir. So nice one. And we can now conclude the current session, and we'll meet again tomorrow. Until then, we wish everyone to have a fortune trading. Thank you.